The biggest lie in crypto is that generational wealth is created during one bull run. This lie has costed people untold amounts of wealth because people then focus on fast gains. They over-rotate their portfolios, take on too much risk. Then when the market turns, their portfolios burn to the ground. Emotions take over and everything falls apart. But then you see me and other investors who don't make any of those mistakes. We knew crypto was lying to us, so we did the opposite instead. And now we all enjoy the benefits of being savvy crypto investors, while only working a few hours a day. Today, I will show you exactly how you can do it too. If you don't know me, I'm Robin. I've mentored over 1,000 investors in crypto and taught them to go from $10,000 to $100,000 and from $100,000 to $1 million and above. So let's get into this. Now, to become a savvy crypto investor, I have to walk you through like the full story, and we can't just dive into, okay, this is a strategy, because you have to understand yourself first before we can really dive into the more strategic side of things. So first of all, we will cover the mistakes that you are probably making and that are burning 90% of all the crypto portfolios out there. And I know what I'm speaking of because I saw so many portfolios, and I know how like the typical path is or looks like of an investor who's just starting out in crypto. The next thing will be the 4 critical market phases that you must understand. Like if you don't understand the big picture, you will never be able to do like all the short-term trades and all the fancy meme coin trades that are going on in crypto, because those things can make you a bunch of money, but you have to understand when you are able to do them. And for that, you need to understand the big picture first before you can do like this short-term trading stuff. And most likely for most of you, this is not the thing that you should do in your first bull run to actually make money. And you will see in a couple of seconds that you don't even have to do that. This is something that like the crypto industry is selling to you, to do all of this short-term stuff. But in the end, like the reality looks like this. Like all the big guys, they are maybe doing some of the short-term trades, but everyone is holding Solana, Ethereum, and Bitcoin and only uses those short-term trades to extend their BTC stake or to increase their Solana stack. So they are not focused on the smaller stuff, because this is just taking away focus from the things that really matter. Now, we will walk over the 4 critical market phases, so you understand like the big picture. And after that, I will show you exactly like how the top 1% of crypto investors position themselves. So you will understand, okay, it's, for example, an uptrend right now, so I should do this. And then we go into the distribution phase, and now my style of investing should change to this, and also my position sizes and so on and so forth. You see, like this is going to be a longer video, but it will be crucial if you want to start making money in crypto. And lastly, I will show you some insights into things that I will be doing this bull run and how I will play also the down turn, like when everything goes sideways and the bear market starts. I will show you exactly like my strategy that I will use in all of the different market phases that we still face in the next couple of months. So I will share you exactly like what I will do there, and yeah, let's just dive into it. So first, let's start with the mistakes that burn 90% of crypto portfolios out there, and that like those mistakes, you should avoid them. Most likely you will see yourself in one of the different scenarios I will walk you through in a couple of seconds. When I started with crypto, I was at the exact same position. So I know where this is coming from, and I know what you have to do in order to like evolve and transform into this one crypto investor that makes money by clicking just a couple of buttons in the internet. So once you understand this concept, it's actually not that complicated. All right, so what you see right here is like the typical performance of an investor in crypto, especially like the people who are just starting out. So we have 2 bull runs right here. The orange line is the BTC chart, and the red line is your portfolio value. So the overall worth of your portfolio. If you don't know how much your portfolio is worth right now because you have multiple exchanges, you have to work on this, and you have to find like a tool which shows you the exact portfolio value. And I would directly start tracking it. Now, Usually what happens is that in the first bull run, this investor buys when Bitcoin is already in the news, and which is like, this is totally normal. Like, you never heard of Bitcoin before, you never heard of cryptocurrencies before, and now there's like big hype around it. And then you say, okay, you know what, everyone is making money, so I throw my money into the pot as well. But the problem is, like, this is already problem number one, you buy when everyone else is buying. You don't want to buy when everyone else is buying, because the price that you will get will be much higher than when you buy when no one is talking about it. Because crypto is an attention economy, and every time crypto is in the news, you can be pretty sure about like that everyone else already bought as well. You see, like, okay, Bitcoin starts performing well. A bit later, this investor starts investing as well. His performance also is quite good in the first part of the bull run. But the problem here is that he doesn't know into which altcoins he buys. So he just buys stuff from YouTube and from recommendations, and basically, like, he feels pretty well because he starts to make money, and he even starts to outperform Bitcoin. So his portfolio is better positioned in altcoins than it is in Bitcoin. So he feels like, okay, I'm making the right. A dog was running here. So he feels like he's making the right move. So he feels invincible, and because he makes money and forgets that his performance right now is normal. Now, what do I mean by that? In crypto, it's completely normal to make money in a bull run. And like, you could hold Bitcoin and your portfolio value would go up. And if you hold like just a couple of good altcoins, your portfolio value is likely to go up even more. And in a bull run, you don't just want to make money, you want to outperform the market. And if you don't outperform the market, your portfolio is not good. You always want to make more money with your portfolio than if you would hold Bitcoin. So you always have to compare your portfolio value, not just on a weekly time frame, but on a 6-month time frame to Bitcoin. If you would have made more money by holding Bitcoin or Solana or Ethereum with all of your money in those three, than you made with your small altcoin bags, then you underperformed and your portfolio is not optimized yet. You want to make at least more money when you have more, like, the more risk you have in your portfolio, the higher the returns need to be. Otherwise, there's no reason for you to hold those altcoins. You want to make sure that you are positioned in altcoins that grow more than Bitcoin or Solana or Ethereum, because you have more risk in your portfolio. And if you hold those altcoins and your performance is as good as Bitcoin, you still have more risk in your portfolio, which basically means you don't have, your portfolio is not optimized. And this is something you need to work on if you feel like this is you. All right, so let's go back to the investor. So he feels invincible, makes more money, a bit more money than Bitcoin. So he actually has like a okay-ish portfolio, but he doesn't know what he's doing. He just feels like, okay, yeah, I'm better than Warren Buffett and make more money than him. So I outperformed him, so I'm a better investor. Like, what is this old guy doing? But the problem is that he doesn't know when to exit. And he kind of knows that he doesn't know when to exit and that he should like do that to make money in crypto. But there's so much going on that he forgets it. He simply forgets it. Doesn't exit, feels like the rush and the hype around crypto, feels like, okay, yeah, everything will go up because this is like such a new thing and Bitcoin is such a powerful technology. It will never go down from here. Or when it goes down, like, the crash won't be as hard as the previous bull run. What then happens is the bull run is over, we go into the downtrend, and his portfolio crashes to where his initial invest is, or below it, because he's still invested in high risk altcoins. And the thing is, when you invest into a high risk opportunity, the growth can be exponential, but also the downfall. And most altcoins will go to zero after each bull run, and this is just the reality. Even like the more secure ones, even if you look at Solana, for example, like, the crash was brutal. And if your portfolio is highly invested into those riskier assets, yeah, the downfall will be pretty hard. So this is like how the first bull run this is a normal performance of a normal investor in crypto. And usually like everyone starts his first bull run like this. The only question is like, what do you do out of that? Like, what is your like, do you educate yourself in the next bull run, the next bear market, or do you stay in this exact performance or in this exact cluster? And if you are lucky and watch this video while this is like your first bull run, then you actually have the chance to escape out of this rat race, out of this like, okay, I make some money, I feel invincible, and then I lose everything again. And then you go, like, you see that the second bull run, the performance is pretty similar. So you have the chance to escape out of this rat race if you already know this information in your first bull run. So this is very powerful if you understand it. All right, so bear market one. So during this time, usually like those investors turn their back against crypto, like they don't want to do or want to invest in it anymore because they lost so much money with it. So they have like a negative feeling towards crypto. So they say, okay, yeah, it's a scam or something like that. They would say something like, okay, it's way too complicated for me. Or maybe they even say I made some mistakes, but they don't think that they have a second chance or a second bull run to basically get back into it and focus on other things that are more important. So this is like the typical thing which happens. Then usually he lost so much money that he leaves his money in those altcoins that he bought in the first bull run. Says, okay, yeah, maybe I will go back to break even and then I will sell those coins. This is like also a typical thing that most investors say who suffered from this first bull run. Usually what happens is they will not sell their altcoins because they don't want to say I made a mistake. They want to stay in those shitty altcoins till they get to the break even or to their break even. And in a second, we will see why this is a problem. Now, he stays in those altcoins. Some of them go to zero. Maybe his portfolio value goes even lower. And then in the second bull run, the bull run starts again. And he doesn't believe crypto's back yet. Like, he thinks, okay, yeah, this is just like noise and it was going sideways or downwards all the time. And I lost money in the previous bull run. So why should it be different right now? So he sees other people making money again. So yeah, his interest is fired up again. So he thinks, okay, right now, like everyone else is making money again. I lost some money through it, but I know that there's also a slight chance that I could make money with it. So he goes back into it again, and again, too late. So instead of like using this time right here, like the top 1% are doing this, he turns his back on crypto and buys late once again. And then he makes another mistake. He starts buying into coins that made him money in the previous bull run. So he buys dinosaur coins, like we call them, and thinks, okay, those coins went up in the previous bull run and they went up a lot. So I should buy those exact coins one more time. So the problem here is that he forgets, okay, crypto, like all the coins that he bought in the previous bull run, they have no fundamental value. Like most of the cryptocurrencies out there don't have any fundamental value. And I say this as someone who's like full-time in crypto. And I always get those comments like when I talk about Cardano or IOTA or XRP, like everyone is like, ah, damn, like, but they went up like 2x in December. And yeah, I made some money. Maybe you even made like 3 or 4x. And like for me, this like funny because yeah, okay, you made a 4x while holding this dinosaur coin for over 4 years. And in the meantime, I had Toshi in my portfolio, which made a 20x. I had Aerodrome, which made 140x. I held AVEX, made a 120x, sold it, and never touched it again. I bought into Solana at $20, made a 5x. Like there are so many opportunities in crypto that you missed by being invested into those coins. And yeah, maybe they have the potential to revolutionize the financial system, but the chance is just very, very slim. And like, we are here to make money. I don't want to trash talk those coins and say, okay, they are like bad and like bad out of a fundamental perspective. Maybe there is some value in them in 20 years, but do you want to miss out on all of those opportunities that are in every bull run just by like staying in those coins that maybe make you a 3x or 4x? Maybe, like, the probability is just so low. And yeah, they're like, and virtuals is another play. Like, I have a video, I will link it up here, how we played like the AI agent type. Like, you miss out on so many opportunities by being invested and married to those old bags that you had that made you money once. And I understand like why people like are staying in their lane, because there's so much hype and so much hate against those coins. From those people who are like OGs in crypto and know like how everything works. And like, there are like two tents, and the one is like, okay, XRP is the best thing on earth. And on the other hand, like, you have people who say, okay, this is the biggest shitcoin on earth. And both sides are fighting with each other. But in the end, like, both are here for the same goal. Both want to make money. So we should rather talk about, okay, how can we make the most amount of money possible, and not focus on which is, like, fundamentally speaking, the better coin. Like, we want to be invested into the things that make us money. This is why we are here for. We are not here to revolutionize anything. Like, like, maybe you are part of that, but I don't think that. All right, so now this is like the typical thing. Like, people stay invested into the coins they bought, and some of the like this type of investor usually also holds those coins because he still like is invested in them and waits till they break even. What most of the time is never happening. So he should have like sold, or sometimes he also holds coins like Dogecoin, where he invested very early. And let's say he invested $2,000 in the previous bull run. His position size went up to $40,000, and now it's all the way back at like $6,000 or something like that. And now he waits till the Dogecoin price goes back to those levels. But the problem is that the price will never go there again, or it will take again like a very long time. And you have like all of those opportunity costs that you're facing, which you just ignore because you have like an anchor sitting at that $40,000 sites, and you think, okay, yeah, I will sell once I'm back there. But the question is like, how high is the probability that we will ever go back to those levels? Very slim. All right, now those types of investors like usually miss opportunities in new sectors, for example, AI agents in this bull run, and yeah, just goes into the things that made him money. So his portfolio performance usually looks like that. He still makes some money. He underperforms Bitcoin, and at one point he has like a big spike in performance. Usually, like, this is a time where like new investors enter the market and they buy into the things that like made money in the past, like XRP, Litecoin, stuff like this. So usually they also buy into those, but usually this is also the last wave of investors, and then they buy into other things, AI agents and stuff like this, which go up more. And usually, like, this is the last wave of investors or buyers in the crypto market. So yeah, he makes some money. It's not losing as much as in the previous bull run. Maybe he makes some money because he knows, okay, one point I need to sell. But yeah, there are so many factors that usually lead to a replication of the previous performance, because like our brain is wired in a way that like we are not made for logical decision making. Like, our brain is made for doing things in a very like naturistic way. Like, you invested so much time into the coins that you bought here in the previous bull run, so much time, money, and effort, that the chance that you will sell it somewhere around here, like, it gets slimmer and slimmer and slimmer and slimmer. Like, the more time you invest into something, the harder it will be to actually sell it. All right, so the bull run 2 performance looks like this. Then in the second bear market, or the problem like why he is not selling in the second bear market is because he talks to or says to himself, okay, this time it's different. We have like Trump now and deregulations and central banks are buying Bitcoin now. Yeah, maybe that's true for Bitcoin, but not for the other altcoins. Like maybe Bitcoin will perform like longer than in the previous cycles, but all the other altcoins work exactly the same way as before. So he is again in up-only mode, and again, I know what I'm speaking of because I've went through the same mindset, through the same thoughts. The only difference between me and you is that I had someone by my side who told me, okay, this is bullshit, don't think that. And I trusted him and I made the right decision and sold. So he thinks like that, holds too long, one more time, once again, and panic sells everything and maybe makes a small profit. So because like then he like has like throwbacks to previous bear markets where he lost everything. So this time he wants to quit crypto, get out of it, and usually ends his crypto career, his short and very unprofitable crypto career, by saying, okay, this is way too stressful and nothing for me. All right, so this is like the typical performance of most crypto investors out there, and it's so sad to see because like, yes, everyone is getting drawn into the short-term stuff and over risking stuff, being emotionally invested into their investments. Like it's so sad to see because it's actually so easy to make money in crypto. And yeah, but to really understand it, you need to understand the 4 critical market phases first. Otherwise, you will never be able to like do like the longer term stuff. And what I'm about to show you right now is nothing that will make you rich in one bull run, but this will make you money on the long term, for sure. And you will see the difference in performances in a second when I show you how portfolios like mine are looking like. All right, so let's talk about the 4 critical phases, and I think the best way or easiest way is to show it to you on this simple Bitcoin chart. All right, so first of all, I will show it to you in the previous bull run, previous 2 bull runs, so you get an idea like, okay, how can this look in the current bull run as well. All right, so first of all, in the bull run of 2017 to 2018, usually what happens after the uptrend is that we have a short distribution phase, meaning in this distribution phase, people or profits go from the hands of uneducated capital to educated capital, meaning people who know that everything that goes up has to go down at one point. They sell to all of those investors who enter crypto at $20,000, $19,000. So the price goes up, people start selling, and usually this is a very short distribution phase, but usually what happens is that during this time, profits go from the hands of uneducated investors into the hands of educated investors. And how you can identify those times, like a very simple way to do this is to like just watch the news. And if you see like a lot of people talking about Bitcoin, and if you see that there are a lot of positive news for Bitcoin, but the price is not reflecting that anymore. So right here, like mainstream media was talking about Bitcoin, and the price went up like a lot. Now, same thing here, and we went up to $20,000. And here, like a lot of different news outlets were posting about Bitcoin, but the price didn't like move that much anymore. So very simple ways just to watch like how is Bitcoin reacting to bullish news. And for example, like in the current bull run, if you see like Trump is talking about deregulation for crypto and something huge is coming and the price is not reacting anymore, this is a very good sign that everyone is already invested and it's time to take some profits. So no reaction to bullish news usually means, okay, we should think about selling right here, at least to taking profits. So there are of course like other ways like the MVRV Z-score. I will link the video to the crypto peaks or peaks in the crypto market somewhere around here, so you can watch it after this video to just understand, okay, how can you identify those peaks in a much deeper way. So you basically like see those things happening, and then you have a distribution phase where profits go, or where money goes from one hand into another, and no new money is entering the space. Then we head into a downtrend, and a downtrend is basically a time where everything just goes down. Like Bitcoin goes down a lot, and altcoins go down even more. So everything that has more risk than Bitcoin will suffer way more in a downtrend than Bitcoin, because higher risk means higher returns, but also higher downside. All right, so price goes down, and then we start, like at one point we see a trend switch, and we go from a downtrend into an uptrend or a sideways phase one more time. And this is what we call the accumulation phase. When the downtrend ends, at one point you will want to start buying again. And of course, like if you just look at the chart right here, you see, okay, we didn't broke like the previous highs, still downtrend, still a downtrend, still a downtrend. Oh, but we had no huge lower lows. So you could have thought, okay, maybe here is like the end of the downtrend, maybe, and you started buying one more time. Or you thought, okay, like now is a good time to start buying. The thing is, like, you never know what could happen, which is why you start DCAing. Like, you don't buy everything at once. So every big investor is doing this. He starts buying, he starts DCAing, and the further we drop, the more money you start like to put into your DCA strategy. So for example, right here, we saw this huge drop. So for me, this was a good time to buy Bitcoin and also other assets like Ethereum, for example. So we started buying, and then we saw like a trend reversal, like a clear trend reversal. And this is usually like the time where you like could buy big. And one of the strategies I will talk about is like to do exactly that, to use those times where you see like this trend switch, and to basically use this huge run up that you see right here. So just to showcase that, or how much that actually is, like when we go from here to here, this is actually 3x or 3.3x. So you could have made a bunch of money just by being invested in a bear market. Oh, damn, you don't have to invest in a bull run to make money with Bitcoin. All right, so in a bear market, you also have opportunities. Okay, so you basically start DCAing right here in the accumulation phase, and at one point we switch into a clear uptrend, and this is what happens right here. And then we again have a distribution phase, which is here. We have a top, an all-time high, and then go back into the downtrend. And then again, we have like the start of an accumulation phase. You start DCAing right here, and now we have this huge uptrend. And the thing is that you have to be reflexive. Like, you can't be like, okay, this looks like a distribution phase because it looks like here. This is not what you can do, like, or what you should do. I would rather, rather than trying to predict what is happening, I would look at the factors that are like showing me right now where we are in the cycle. Like, you can't predict, okay, do we go further up, or will we start going into a downtrend? Like, what I like to do is look at indicators like the MVVZ score, or like many other indicators. Again, just watch the video and try to like identify, okay, where are we in the cycle right now? And rather than saying, okay, it looks like because of this technical indicator and the Fibonacci retracement, we will go lower from here. Like, in my opinion, most of this is bullshit. Sorry for all the technical analysis, guys. I rather look at fundamental changes and on-chain indicators. So on-chain indicators are something different because they're still based on or whatever. Okay, so we have this phase here, and now it's actually like we have to understand, okay, where can we go from here? We have like a lot of fundamental buying pressure. We have like all things looking good for crypto right now, and we still have more capital which could flow into the market, but again, like, it could also change. And right now is actually not a bad time to take profits. And you see it right here, like a lot of people are taking profits in this $100,000 mark, which is why we can't push higher. So now what needs to happen is that new money continues to flow into the market, and it should happen quite soon. Otherwise, we could see something like this. Maybe not on the scale, or not on this scale, but still we could see a mini downtrend. And so we need to be like we acted. And for me, actually, those times are times where I don't want to hold high risk assets. So you basically, to summarize, like the 4 critical phases that you need to understand before we like dive deeper into the strategic approach of the things, like you need to understand that we have an accumulation phase, which is the time where you want to start buying and want to build up big positions. Then you have the uptrend where you can start taking profits. Then we have the distribution phase where you also can continue to take profits and look for opportunities, because usually like this run up right here was a huge altcoin rally. So you can look for like higher risk stuff right here, but like always exit. And then we have the downtrend, which is usually a good time to short. And then again, we have the accumulation phase, and then this cycle basically repeats over and over and over again. Now, when we head back to the other thing, I just want like go to the chart, watch it, and try to like understand the different phases that we just talked about. For me, this is very clear, but for you, you need also to like, don't just watch the video. I want you to really understand what I'm talking about. So look at that chart on your own and try to identify those phases on your own. Question is, how do you position yourself like the top 1% of the crypto investors? And we already talked about that, but I want to show you like how the portfolio value of investors like me actually looks like. So remember, like we buy early, like we don't wait till the news push crypto or push Bitcoin. We know when like we are invested throughout the accumulation phase already. So our portfolios usually look like this. The Bitcoin price goes up and we start to outperform Bitcoin right away. Like we hold stuff like the major currencies like Solana, which just go up way more than Bitcoin, even if Bitcoin is a very huge portion of our portfolios. So we ride this uptrend and then we start selling in the uptrend and in the distribution phase. So usually like we have a very flat portfolio performance, because there are maybe some opportunities where you can make like a bunch of money, but the biggest opportunities and the easiest opportunities where you can go big, meaning with like a lot of capital, are in those early phases. And later on, the downward risk is so much higher than the upward risk, which is why you navigate this risk by lowering your position size. So this is how you like still maybe profit from some of the opportunities. Like maybe you take like the AI agent hype, which was a pretty good play, or the base hype, like stuff like this, to further increase your portfolio performance. But like usually we have this performance and then we sell, and then we only have like smaller positions. Then maybe we have a small drop because we still hold some Bitcoins. And then over the span of the bull or bear market, like our portfolio value stays the same and maybe goes a bit lower because we start to accumulate right here. And then again, you see like when the Bitcoin price moves up one more time, like the portfolio value is already so much higher than it was at the early stages. Like because we sold, took profits, accumulated in the bear market, and then rode the wave again in the next bull run. Like the difference between just being invested in Bitcoin and your portfolio value is so much higher. And also when you compare to other investors in the crypto market, just because you're not greedy, because you know how the big cycles work and you're not getting drawn into the short-term stuff. Like you are focused on the things that actually matter. Now, how does a typical top 1% crypto investor thinks or acts in the first bull run, or in this like bull run number 1? He buys before the news, has a strong combination of Bitcoin and alts. Like every portfolio should have some altcoins in it. Of course, there are people who are Bitcoin maxis. I also understand them. So if you are not into like higher risk stuff, you can also hold just Bitcoin. And in my opinion, like in every good crypto portfolio, there also need to be like a combination of good altcoins, and just to like increase your potential returns. And he rather sells early than too late. Because like when you think about our human brain, like selling on the way up and looking at potential profits that you could have made, like they are not changing anything about the situation when you sell like on the way up. When you sell on the way up, you might miss out on potential returns in the future, but they are just like an idea of maybe it goes up there. And the barriers, the mental barriers that hold you back from actually selling at this stage are way lower than when you start selling on the way down. Because when you start selling on the way down, you had this portfolio value. You already made those profits. You saw this number on your screen and say, okay, shit, I could have made X amount of money if I would have sold. So you have an anchor around this price level, and every time when you now when you are below it, you start thinking, okay, I will just hold till it goes closer to this price level again. But historic performance is not saying anything about future performance, and this is something you need to understand. Like even for strong major altcoins, maybe the same is true for Shiba Inu, the same is true for Dogecoin, the same is true for Cardano, the same is true for XRP, and so on and so forth. Just because we went to a certain price level, this doesn't guarantee that we go back there. And just because you saw your portfolio value sitting at that one price level or at this size level, doesn't mean that you will go back there if you just continue holding the coins that you currently hold. Most altcoins will go to zero. So holds a strong combination of Bitcoin and altcoins. Rather sells earlier than too late because of the sunk cost fallacy bias, which actually leads you to continue holding those coins. It's not married to the bags and takes profits in the distribution phase. Actually, this is the latest stage where you can take profits, or where you take profits, and ends the bull run with secured profits. We just look at making money. We are not interested in the very small chance of generational wealth in one bull run. We know that if we continue playing this game over a long enough time horizon, we will come to we will be able to purchase everything we want in the future, but we have time. And you don't have to be this stressed version who's I need to do this, I need to do that, I need to do that. I need to be in AI agents, I need to do the XRP trade, I need to be invested into Cardano for this 20% gain. This is all nice, but you see the portfolio performance of the investor who's chill versus the portfolio performance of someone who's acting like this. There's a huge difference. And I can tell that this is going to happen with your portfolio if you act like that. Now the bear market one on this value graph right here is just this investor has way more leverage, meaning that he understands crypto's here to stay, and his portfolio value is already way higher than in the previous bear market. So he just uses it, invests into undervalued majors like Solana, Ethereum, and Bitcoin, and is ignoring the altcoins that maybe are still good, but stuff for example, AI agents, most of the AI agents that are going through the roof right now, even if I made a bunch of money with them, I will never touch them again. And chances are really high that most of them will go to zero. And even if they make me money, I have no emotional attachment to them. So I don't give a damn about them. And in the next bear market, I will buy Bitcoin, Solana, and Ethereum. If Ethereum continues to underperform, maybe I will drop Ethereum as well. But I will buy into the majors, hold them, and this is it. No old altcoins that made me money in the first bull run. I ignore them. I don't give a damn about them. And I simply DCA. I don't try to play it extremely smart and do some crazy buy-ins or sniper buys where I buy everything at one specific price because I looked at 1,000 different indicators and they tell me exactly, okay, this is the bottom. No, this is not what I do. I basically buy them and via DCA, and sometimes I buy more, but overall I DCA because you never know what is happening. like there can always be like a black swan around the corner, a black swan event around the corner that you like haven't secured yourself against. This is like the nature of black swan events. You will never know when they happen, so better prepare that they could happen at any given time. All right, so how you can do that, like I will do a video about portfolio strategies and stuff like this in a later video. All right, so bull run 2, BTC and majors perform extremely well in the first phase of the first part of the bull run. We saw this in this bull run. We had Solana, we had Bitcoin, we had Ethereum. Of course, there was a lot of negative sentiment around Solana, but still looking at the technology, like there was so much, the technology continued to advance, the community stayed strong. And if you really understood the situation back then with FTX, you would have known that Solana is still something that is interesting. And of course, there are times of doubts, and there's also risk, which is why you don't go big into Solana and rather big into Bitcoin. But still, it was a good player. And yeah, I did a lot of research around it and basically came to the conclusion, and there are like recordings of me saying this back in the day, so I can show them. Yeah, there was just like a lot of positive, there was still a lot of interest around Solana, even without FTX. Now, basically, they performed very, very well in the first bull run, or part of the bull run. Then what we do is we focus on the things that matter in this bull run and not on the things that mattered in the previous bull run. So I always try to understand, okay, which narratives are the ones that will lead to exponential growth in this bull run. We had base, we had, I was wrong on ton. And there were too many black swan events around Telegram at the time where I went into ton, but ton still, like the idea was good. Then AI agents, we nailed AI agents. We have a video about AI agents, how we found it, and we already like in other narratives again, which seem to be again the best altcoin narratives that you can be invested in. So this is what we do in the second bull run. Like we still hold a bunch of our capital in secure assets, but are also focusing on the things that will lead to exponential growth all over again in this bull run. And then again, we exit in the distribution phase and don't wait till we see a downtrend. The psychological barriers will just be so much higher if you exit in a downtrend. And again, this is not something where you can say like, okay, this looks like the distribution phase, I'm out. You have to look at on-chain indicators and again, look the peak signal video. And as soon as they show you, okay, the market is overheated, just exit. Of course, you could have made more money, but again, think about this graph right here. You don't have to make generational wealth in one bull run. You can wait for the next bull run because like 100% crypto will stay here for a long time. And you will have more opportunities to go back into the crypto market and make money again with the crypto market. So we basically repeat the first bull run, and in the second bear market, repeat what we did in the first bear market as well. Like buy back into majors, and then this is like the game we play, and we play it over and over and over again without putting too much effort into it, and we know that we will reach our targets. So it's that simple, and you don't have to do like all of this meme coin trading stuff because this doesn't really matter. Like on the big picture, the big positions matter, and the big positions should only be invested into coins where you have like a high certainty that they will be good investments. All right, so let's head into the next part. All right, let's go into my all-weather strategy. So it's actually not that complicated, but yeah, we'll try to walk you through it without talking too much about things that are not necessary to talk about. So in the accumulation phase, I position myself in strong majors like Bitcoin, Solana, and Ethereum. There's no like big strategy to it. Then I figure out new narratives that could just make sense. For example, the base thesis I had a while back, there were also people like who went with me into Aerodrome and Toshi and made good money with it. Then we had the uptrend. In the uptrend, I just hold majors and like maybe some of this stuff. Take profits by risking down. So what I like to do is like if I have a Solana position and I know we are still in a bull run, I still want to be invested into the crypto market and have exposure, which is why I say, okay, when I risk, I always risk down. So if I have, for example, Toshi, let's say Toshi is a meme coin on Base, which is a layer 2 on Ethereum. So the logical step for me would be by risking down by taking profits from Toshi into Ethereum, and from Ethereum into Bitcoin, and from Bitcoin into stables. And as long as we are on a bull run, I like to go this pattern, and sometimes I don't take profits in Ethereum and take them directly in Bitcoin, but I still stay invested into those more secure cryptocurrencies. So Bitcoin usually is a good place to be. So I invest, I take profits into Bitcoin, and at one point when I see a clear trend switch, I go back into stables, and from stables usually into cash directly. So in the uptrend, I also go into strong narratives driven by consumer innovation. So in the previous bull run, we had metaverse. Now we have AI. In the next bull run, it will be something else. Who knows? Maybe quantum technology. And this is what I like to do. I always try to be in those narratives throughout the uptrend, or try to find them throughout the uptrend. Try to find them also in the accumulation phase, but sometimes consumer-driven innovation is usually happening very quickly. We had ChatGPT 3.9 Turbo launching, and then a lot of people downloaded the app, and then AI just went through the roof. So here I just like to be invested in them when the time is right, and when I see something like that happening in the real world, and we have an uptrend in crypto, usually the correlation is very high that coins in this category in crypto will also go through the roof. Now, in the distribution phase, I continue to sell, and I start to build smaller positions and hold them for a shorter period. So when I have a thesis in the distribution phase, and your idea is to hold this, or you need to hold this investment for more than 6 months, this might not be the right investment for this specific time. You want to have something, you want to invest into something where you know, okay, in 2 weeks there's a product launch which will bring hype into this new cryptocurrency project. Because the longer your thesis needs to develop, the higher the risk is that we are already in a bear market when, for example, this new product launches after 6 months, or whatever happens further. You want to have smaller or shorter periods, which are especially good for distribution phases, because the distribution phase usually doesn't take that long. So your investment thesis, when you build positions, should consider that, and also your positions should be smaller. So you don't want to have huge positions in a distribution phase, because the downside risk is so much higher than the upside risk. So you rather trade than invest. I switched from an investor mindset to a trader mindset. And in the downtrend, in the previous bear market, I knew that Luna was a Ponzi scheme. And we also talked about that in our program, or in the program that we have been in at that time. So we knew that this thing is a scheme, and we didn't use it as much as we could have. But in this bear market, in the next downtrend, I will go very big into it. In the previous bear market, there was GCR, for the ones who don't know him. It's a guy who also predicted the Luna crash and actually shorted the crash with a lot of capital, and he made a shit ton of money with it. So, and GCR basically looks for inverse investments, meaning I look for coins and products in crypto which are either a Ponzi scheme or are based on nothing with a weak community. And those things, I like to short them. And this is usually a good way how you can make money in the downtrend. But again, if you have no one by your side helping you, this could also be a very risky thing. So I short basically the market and short good inverse investments. I'm looking for good companies for those inverse investments. All right, so after the short, I will stay in cash, not stables, because stables also are risky to some degree. So you hold your cash, like when you have a no risk position, you want to have a no risk position, or at least like the risk should be as low as possible. And being invested in the stables means you still hold a financial product of a company who could go bankrupt. And especially if you think about crypto stablecoin companies, like they are crypto companies. And if the crypto market is not strong, chances are high, or not high, but there is a chance that they go bankrupt. So you should be invested in cash. All right, and I go back into majors and maybe play the bounce. So then people take profits on their short positions, for example, on their Ethereum short. Then you can profit of that because people, as soon as they close their shorts, they are buying Ethereum, and then you have like a short period where people close their shorts and where you can actually make money by being invested into Ethereum for a shorter period, like when we basically have this trend switch, when we go from a downtrend into an accumulation phase. Like usually like this trend switch right here is a good opportunity for a pretty good trade if you are very active in the market and know how to identify those like periods. All right, this was a very long video, but I think one which is necessary if you want to succeed in crypto. If you want to get like ideas like that, the way like I think about the market, like if you just want to copy my brain into your brain, I've linked a free Telegram channel where I just share investment knowledge, no coins. Like if you are looking for that, you're not serious about crypto investing, and then this group is not for you. This group is for people who really want to understand like how to invest into crypto and build long-term wealth. So if this is you, check out the Telegram channel and leave a follow so you don't miss like the next video. And with that being said, see you in the next YouTube video.